getting a payout with your personal account is like day and night difference when it comes to like a prop account, because I think the prop account payout really feels like that you are getting a degree or something. Yeah, if you get me, because you went through all this like whole boost of emotions, like going in drawdown, coming back up, and then passing first stage, and then clearing the second, and then the first payout. Yeah, that was something like when that hit my bank account, and I was like, yo, so this is like really real. I can create a living out of this. This is not what I'm just pressing buttons and everything. It's just like real thing, and I can achieve a lot with this. So that feeling was like just amazing at that point. But I think I after my first payout, I didn't trade for like 2 days or 3 days just to make everything normal and like start it again.
Welcome back, everyone, to the Fivers YouTube channel for yet another traders interview. This time we're going to be interviewing Mohammed, who is a funded trader with us here at the Fivers. He got a 100K high stakes account, had been paid multiple times. Welcome, Mohammed. Thank you for doing the interview. How are you today?
Yeah, all good. Thanks a lot for having me over here. I think it's a great opportunity, and thanks a lot to Fibers for that. Yeah, I'm all good.
Great. It's super great to have you here today. Maybe you can start off by telling us a little bit about your trading journey. Who are you? How long you've been trading, and what type of trader are you?
Yeah, so I first got to know about trading in 2021. It was through a scam, like a Ponzi scheme. So, yeah, long story short, so at the end, I got scammed by it, but then I realized that the way they scammed me was using a term called Forex, and I was getting into it because you see, like they were promising these so big, huge amounts and everything. And I was like, even if it's like real or not. And then I got into Forex and I realized, oh, the daily market cap and everything. So I said, okay, yeah, I'll have a look into it. And then I started doing it personally in 2021 using personal accounts and everything. And you know how it goes. Started with like blowing accounts and stuff. And then, as a current day and age, I would say it's unfortunate for a trader to start trading because there's so much information available online. You cannot understand what is real and what is not real because you see, like, people are trying to sell stuff and everything. So, kind of like filtered myself through that, and then finally came up with my own concepts and my own knowledge could might be considered as different. Like if I'm gonna show you like strategy and everything, you might say, oh, this is related to ICT and stuff, but I'm not stuck to one strategy. It's like just all the things that I realized during trading, and after doing trading and realizing how market works, I came up with my kind of own strategies and stuff, and then finally stuck to like swing trading and intraday trading. But again, swing trading requires you to hold trades over longer periods, and I think that's not perfect for trading on firms and stuff. But with their real account, you can do that. But with like firms and stuff, properly just stick to like intraday trading. So I would say like scalper and intraday trading is my style.
Right, interesting. So you've been trading for, then you started 2021, so about 4 to 5 years right
Yeah,
now. And how long did it take you to reach success and feel like you're actually getting this? Because you mentioned, there's a lot of information out there, and you have to filter through out there. So when did you feel like, how long did it take to filter through all the information and actually set up something that was working?
I would say around like 2 years, but it can vary for person to person because for me, 2 years is gonna be like, I would say at least 4 years for a normal person because I was giving like 12 to 16 hours every single day for the 2 years. It finally clicked at one point when I realized the most important thing is just to clear out from every all this noise. And the major thing I realized was the risk to reward ratio and probabilities. That was the only thing when I finally realized, okay, if I just put it in a mechanical system or like backtest it, I am going into a trade knowing all my statistics. So if I'm taking 10 trades, I know the max I can lose is like 4 or 5 trades. And after that, I'm going to make double of all what I lost by doing the backtest and everything. That's when I realized I gained confidence, like, okay, I have now that like this. I backtested for like past 10 years. And then I realized, okay, if it played out in like for like past 10 years, gained me confidence. And I was like, okay, if I keep on doing this, it's gonna provide me similar, not the same, but similar kind of results. And I would be getting into a trade more prepared. So By the time I did all the back testing and everything, that's when it clicked in my mind. Okay, now I'm gonna be like kind of a profitable trader. So roughly around 2 years, I would say. But for a normal, not a normal for varies person to person, but 2 years if you are gaming like 12 to 16 hours every single day, including the weekends.
Yeah, I think, yeah, 2 years sounds like a reasonable amount of time. I mean, for myself, it probably took around 2 years to understand the basics and kind of get into it as well. I've seen people say it took them 10 years, and, it's individual. It's going to take,
Yeah,
different times for everyone. I think the important thing is just to stay consistent and, like you said, look at the, do study price action and test your system and really, like you said, when you started back testing, that's when it kind of started clicking. And I think a lot of
yeah,
people they start back testing way too late in their trading career.
yeah,
You also mentioned the swing trading that you believe swing trading is better suited for like a personal account, and you're more interested in scalping or intraday trading. And
yeah,
I would assume that that's because of the like the daily loss, right?
yeah. Yeah. So the thing like things like you remember like last Friday what happened with Bitcoin, yeah.
Yeah.
So if you were in a swing trade on that account, probably your account was gone. If you like positioned your place at like 110 or like 115, you probably there were probabilities. And same goes with gold as well. If I'm shorting gold and one morning I wake up, gold has shorted up like 10% and my account would be gone. So yeah, that has mostly has to do with like stuff like the daily drawdown and everything. But if you have got it managed, like because I don't know, for me, for swing trading, my stop losses would be like really large, and it's not worth getting into a swing trade at the if you realize that at the end of the trade you are going to be making like 4 or 500 or 600, but after a week you have to usually lot size properly, increase the lot sizes as well, but at the same time keep the stop losses big as well. So it's you can do that. I know people who do that as well, but like it's not related according to my strategy. It's not a good thing, or I cannot deal with it.
Yeah, and you said something important. It's not according to your strategy. I think everyone watching
Yeah,
here as well, like don't get discouraged if you're a swing trader,
yeah,
because
yeah. No, no, no. I'm not doing it.
I'm a swing trader as well, and I trade on the hyper growth account, and it
Hmm.
it has it doesn't have that trailing stop loss, and it's only a daily pause. It's not, you don't lose the account. So if you're a swing trader out there and you look for account, you should probably go with the hyper growth. That's the best account for swing traders. Now, if you're on the high stakes, I do not recommend swing trading. I do recommend more intraday or day trading. So, Mohammed, maybe we can look at your. Do you have access to your dashboard, the
Yeah, yeah,
Fiverr
yeah, yeah, yeah,
dashboard
yeah. Uh,
that you're trading right now?
yep.
Nice. That looks like that. Maybe you could explain. So this is the current one right here, and you are getting very close to the target as well. That's really cool
Yep.
to see.
For the
Now,
scaling, yeah.
so what happened? What happened on those? Because what I see here is you're taking a lot of small trades, and there's a
Mm-hmm.
lot of small winners, but
Mm-hmm.
the drawdowns here in the equity curves, like those two big ones. What happened there?
Yeah.
Maybe you can explain a little bit of what happened.
Yeah. So what happened over here? You're gonna see like for how I trade is like when I'm in a drawdown, I kind of get a bit aggressive. So you're gonna see like this whole sharp curve to the downside, but then you're gonna see in one trade I made almost more than half of it back. So it's how like I switched to like my aggressive approach. So how sharply I go down, I came back up really sharply as well. So that's when I get aggressive, and like I really want to normally trade like that as well. But with prop firms and prop accounts, I'm like building my portfolio. I don't want to risk it. But when I have to risk it, I would just pull the trigger at that point. So there's no point in like then for small growth at that point. So, but I would say like these trades, they were like kind of like intradays, but I had like longer targets with the bigger, I would say, lot sizes for the recovery thing. But the main thing is I only risk 1% per trade. So you're gonna see over here, it only got lost by 1% on each step. But when I made it back, it was like 2 or 2.5% gain. And this happened during the time and was when gold was just blindly pushing up based on fundamentals. So my setups were off sell positions and they were not playing. And then when I switched my buyers to buy position, then the gold was doing retracement. And that's when I kind of like this downfall came in and the second one as well. So that's what happened. But at the end, I managed my risk. So that's why I did not end up blowing my account. And you can see whenever I came down, I got back up even faster. So that's just part of my strategy. I know it's gonna happen because I back tested everything. So
Yeah, that's
yeah,
some really good recovery here in the equity curve. I really like that. Now, just to on the payouts, because I know you have a waiting a payout as well, which means
yeah,
your total payout is going to be like 9K, and it's quite a lot of money. I mean,
yeah,
what did it feel like? Like when you had a first payout, you're basically being able to make money, just drawing lines on the chart and pushing button and
yeah,
getting.
yeah.
What did it feel to get that first payout?
I would say like getting a payout with your personal account is like day and night difference when it comes to like a prop account, because I think the prop account payout really feels like that you are getting a degree or something. Yeah, if you get me, because you went through all this like whole boost of emotions, like going in drawdown, coming back up, and then passing first stage, and then clearing the second, and then the first payout. Yeah, that was something like when that hit my bank account, and I was like, yo, so this is like really real. I can create a living out of this. This is not what I'm just pressing buttons and everything. It's just like real thing, and I can achieve a lot with this. So that feeling was like just amazing at that point. But also I wanted to control my emotions as well, don't get overwhelmed seeing the withdraw and going like, okay, I got a 2 grand withdraw, now next time I'm gonna go for like a 5 grand one or 6 grand one, and then end up losing my account. So yeah, it was mixed emotions, but that's the thing. I just wanted to stay consistent because I've been through a lot of stuff, and now I know like what the feeling is, that dopamine effect that hits you in the mind, and you're like, okay, now I'm gonna conquer the world with this account. But yeah, so yeah, it was like awesome feeling, but at the same time I was like, okay, this is part of my trading journey, this is part of my system. It's gonna happen. I'm gonna have really good payouts as well, and really bad drawdowns as well. So yeah, just had to stay calm and like calm down my nerves. And I think I after my first payout, I didn't trade for like 2 days or 3 days, just to make everything normal and like start it again normally.
Nice. I love that. Maybe we can go into a trading view and we could perhaps look at some setups and you could kind of walk us through your trading techniques and maybe show us a couple of examples.
Yeah. That's so. Yeah. So this is the trading view. So I've got like a lot of different setups and everything, but I'm gonna start sharing one of them just to tell you like how it usually works when I'm on the charts. So the first thing I'm gonna see is like price moves, I believe, in kind of waves where they're like a certain level of buyers and certain levels of sellers. So you need to know like how long the buyers are gonna last and when the sellers are gonna start stepping in. One of the easiest way I found to do it is like you see this red line over here. So this is from a start of a buying wave, I would say, or buying momentum, and it's till the end of where the buying momentum ended. So this whole line represents the whole buyers in the market. It's just kind of like quantizing them. Okay, so this is the momentum that buyers can bring in, or this is the amount of buyers that are in the market. So this line, I would say, represents buyers, and then this one is just a wave for the sellers you see down there. So these are sellers and these are buyers. So whenever market starts pulling back, what I would see is like I just drag these sellers and put it on top of the wave of the buyers. And now then I realized that, okay, now I'm going to sell, but how long the sales are going to play out. So it's usually the same amount of sellers in the market when they come in, and when they start dominating the market, it's usually the equal amount of sellers in the market. So you see at the end of this line on the right over here, I'm just going to show you with the as well. You see right down here, that's where the sellers kind of ended and pulled up and started taking their profits. So that would be my target for the sales. And then I'm gonna move and look for a buy. And how long the buy is gonna last is the same wave as before. So you see at top over here, the buyers exactly at this point just stopped taking their profits, because that was the wave of the buyers, and then they started taking profits and ended up just exiting out of the, I would say, their trades and stuff. And again, when I start seeing a seller's momentum, again, I'm gonna drag the same sellers again and kind of put it like over there. And then you're gonna see again the sellers only played out over here. So that's how the wave continues to go in a market. So whenever I see the buyers fully in the market and they have started playing out, I'm just gonna drag the buyers momentum and see what the next target could be potentially. And I only plan buys. And then when I realize, okay, the buyer's target has been hit, then I'm gonna move to the sellers. So that's the first main thing I usually look for at the moment the market is in buying or in selling. That's like how I create my bias. And after that, what gold is at the moment doing, and this is one of my favorite setups, is whenever gold creates a new high, just like over here, it created a new high. So usually what happens is whenever gold comes back to that high, it usually gives either it's gonna respect that high or it's gonna break that high. So whenever it comes to that high first, what I usually look for is a seller potential at that point. So you see the recent high was right over here. When the market came back over here, we saw a rejection. I can take a sell, and that would have easily given me 100 points. And again, whenever I see a market has broken that previous high, I just enter the buys, and that would be it. So it has happened over here, and then again over high, you see the market came back, but then gave us a sell. But when time it broke the high, it just started pushing back up again. So over here again, it created another all-time high, did a retracement, but this time no rejection. It just keep on going through. You can just simply take a buy. And now you can see it's just this buying line over here that has given me so many setups. Like every time price comes over here, it does a reaction. So we had this all-time high, price came in, gave a reaction, came back in, gave us a reaction. So that's how like I believe market kind of moves in waves. And whenever an all-time high exists, market usually breaks it, buyers take their profits, and then sellers come in the market and they go down. And then whenever buyers start stepping back in with loading their new buying positions, it's going to create another all-time high with the momentum thing that I told you before. So that's it. But then comes the entry. How do I take my entries? So whenever I see something like this, that's my point of interest. I'm going to see there's an engulfing going on over here, if you can see. So there's an engulfing going on over here. I'll just mark that zone. Some people usually think like engulfing has to be in a single candle. Like if there's a seller candles, the next candle has to like fully sweep that candle and like close on top of it. For me, I don't believe in that. I believe that if there's a 1 hour selling engulfing, if there are like 3 more 1 hour candles that are buying, that's an engulfing for me as well. So I just marked that zone, and then I just simply moved on to lower time frames. And if you just come over here, that was the zone that was marked over here. And when the price came back over here, what I usually like to do in gold, especially, it respects RSIs. So you see over here, the price was forming lower low, but if you come up to RSI, it was 1 second. So you see over here, RSI was clearly making a divergence over here. So that's when I see the first candle comes up, I'm just gonna go for buying position over here. And you see with a minimal drawdown, you got a nice 1:2 reaction. But if you wanna keep on holding to this zone, it's gonna give you even bigger trades. And these are the kind of trades I take, and with a bigger loss size for my recovery position, and it just keeps on going. So for if you guys are trading gold, I would say RSI is one of the major factor in gold, and divergences usually play out. So that's one of my setups that I usually do, and most of the time it plays out.
All right, so that's very interesting. So basically, you start by looking at the trend, and you try to figure out the
Yep.
behavior of the trend, and you're basically looking for the current trend to repeat the pattern.
Yep.
And
Yeah.
is there any like are you seeing any I mean, there comes a point when there's changes in behavior, right? So you have, for example, you get an uptrend, and then you're looking at, the where you draw the lines with the sellers and the
Mm-hmm.
buyers.
Yep.
So, but there comes a point when there's a change in that behavior, right? So on gold here, for example,
You wanna go
uh,
back to the 5 minutes here?
I think that kind of makes sense. So you're getting the overall structure on the higher time frames first, right?
Yep. Yep.
Okay, and then you're trying to trade within that overall structures. But when is there like a change in the
A
trend?
reversal kind of like change in trend. Yeah. So how that usually happens is like, first of all, we need to understand what kind of market we're in. If we are in gold, our bias has to be bias all the time, because you see gold is a metal, and you're not gonna end up one morning you wake up and the quantity or supply of the gold has increased. This means the value of gold is gonna decrease. But usually gold is in an uptrend, and that's what you look for in a gold as bias. But what you're talking about, like trend reversal, how usually that happens is, as I showed you, like again, I'm gonna show you like, so if you think like there's buy wave over here going on, like this one, and then there's a seller wave going on. So what I usually, how you can spot a trend reversal is like if a buy trend is like really high and the sellers is low like this one, the reversal is going to come when the ties are going to switch. You're going to see a longer seller wave compared to buy wave. So when seller wave is getting bigger than the buying wave, that's when you know the overall market is in a downtrend or going into a downtrend. You're going to see it gradually as well over the months, that you're going to see, okay, the buy waves were like 200 pips initially, but now they are going into 180 pips, 150 pips. And the seller pips were usually like, seller waves was usually like 50 pips, but now they are increasing to 80 pips and 90 pips. And there's going to be a time when it's going to switch and you're going to see more bigger seller waves compared to buying waves. That's when you're going to realize, okay, now the trend is overall switching. And now we are going into a seller momentum. So it's the same that I told you now. For the buying, it's going to be similar for the selling, and you're going to see it with time like, okay, now the buyers are losing their interest. Now there are more and more larger seller waves compared to buying waves. So that's when you realize, okay, now the trend is switching and now we should be moving to a seller or like sell market or a bearish market. And that has happened before in like 2022 as well. You remember the market started going to sell side. It moved down to $1,600 as well. That was the time when market was making like more bigger of seller moves than buying moves, and there were like bigger selling legs compared to buying legs. That's when you realize, okay, now the market has switched trends. So yeah, it's the same thing but opposite. You're gonna see longer momentums of sells compared to buys. That's when you realize that the market has switched, is biased.
Right. So you're basically looking at decreasing momentum
Yeah,
as a warning sign of
yeah.
a trend shift. But are you looking at like lower highs and lower lows and like are you looking at the swing points?
Yeah, swing points can only be used for, I would say, entries. And usually, how I get my swing points is using RSI. When I see like, okay, it's now hours sold, and that's gonna be usually low of a higher low kind of thing in a buying trend. So yeah, because for me, I believe that there is nothing such as, I would say, higher high, higher low, low, high, low, low. It's like sweep of liquidity for me because it's not consistent. Like you're not gonna see, or as far as I know, I don't usually see similarity in all, like a pattern in higher high, higher low. It's usually sometimes one higher high like is bigger than the other higher high. So I just look at the RSI and the momentum at that point. Okay, now I see kind of divergence. So this means this could be a potential higher low. So market can make another higher high now because the momentum is switching. So yeah, in I would say sort of, you are right, like higher high, higher low and structure wise, but I usually use RSI for that, and that's about it.
Okay, so for your entries, you're basically looking for price to, so looked at what you explained here with the levels. So you're looking at,
Mhm.
you're basically trading support and resistance, and you see
Mhm.
price into resistance. And if there's a rejection at resistance, you want to go short. If there's a
Yeah,
breakout, you want to long the breakout. And here we
yeah,
see price coming down into support level.
yeah,
And then you go down into the 5 minute and you look for a bullish divergence on the
yes,
RSI. And then
yeah.
you enter when there's a bullish divergence on the RSI with price.
Yeah, 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 you got it. Like I would say, spot on, kind of spot on. But the only thing is the divergence. There are like different kinds of divergences, and that's only a certain type of divergence I trade and I have confidence in because I've got backtest and data for it. So yeah, that's kind of like it, support and resistances. And whenever you see a divergence at a support or a resistance, you go from that. And the reason behind that is you get like really small stop losses when you do with divergence or play with divergence, because you're gonna see over here the exact candle I took the trade on, price never came back or never gave me a drawdown. And that's one of my psychological points that I cannot, like, I'm a kind of a trader that wouldn't take drawdown really well. So I try to come up with a strategy that has least amount of drawdowns, if that makes any sense. And then I
Yeah.
switched up a bit with time. I realized, okay, trade drawdown is not a big deal. And then I started doing swing trades as well. But usually, if you cannot like be like, okay, you cannot train your mind that quickly that be okay with drawdowns. I cannot train my mind that, okay, from tomorrow morning, I'm going to be okay with my drawdowns. Rather, I would focus on some setups that wouldn't give me a drawdown that's a lot easier and faster rather than going, okay, I'm going to train my mind that it should be dealing with drawdowns. So that's the way I found around it. Okay, then find a setup that's okay with my psychology, and RSI is one of them that helps me like with low or no drawdown. It gives me my setups. The only drawback with that is RSI setups usually hit your break evens quite often than other setups because it's a quick entry. You have to move your stop losses to break even when it goes 1 to 1, and it might hit your break even. But that's the thing, you have back tested over like 10 years. So you know that's gonna happen, but at least you're not going into drawdown and you're not playing with your mental psychology. Instead, you are training your system to be according to your psychology.
Right, that makes a lot of sense. So just before we start wrapping up here, there's a few things. So we got the entry nailed in here. So what about the stop loss placement and the take profit? Do you have any rules around where to place your stop loss and rules on where to place your TP?
Yeah, so usually what I would say is initially when I started trading, my stop loss take profit was strictly at 1:2 because that plays out over a long period of time. Even if you have like a 50% win rate, you're gonna be profitable. But as growing with the market, I realized the trading is kind of a better option. So whenever I'm in like 1:1, risk to reward, I usually trail my stop loss to break even. And after that, if I move to 1:2, I would move my stop loss to 1:1. And if I move up to 1:3, I move my stop loss to trail to 1:2 and stuff like that. And one another thing that I usually look is at RSI levels as well. So if I'm in a buying position and it's going into oversold, RSI is going into oversold and it's forming kind of a bearish divergence, I know that there's no point in holding it now and it's at a key level as well. So that's when I usually manually just get out of a position. Same goes with selling positions as well.
Right, so you use RSI in exiting the trade as well. So you're in a long and
Yeah,
then you see perhaps a bearish divergence on the RSI and you want to
yeah,
exit the trade at that time as well. All
yeah.
right. All right. That's a very interesting use case for the RSI.
Yeah,
Now go, yeah.
yeah. But one thing I want to add is that you can either fully go out of position when you're seeing a divergence forming, or you can partially take profits because you see, like, it's not like every time market is gonna go into bearish divergence or bullish divergence, market is gonna play out. If that's the logic, then market is just gonna consolidate over the long period of time. So you can either like lower your position size or just wait for another divergence in your, I would say, in your favor, and then add on to position. That's what I do as well, adding to my winners as well. Sometimes I usually do if there's another bullish divergence formed in my setup, where I'm currently in a setup, what you guys would call is as a pullback or like new higher low. I would just add as well because that's when another divergence would be formed as well. So yeah.
All right. So that kind of explains the technicals quite well. And you don't incorporate any fundamental analysis, do you?
I would say fundamental is like the most important thing in this world at the moment because I would say technicals are like a small little child in front of fundamentals. So you have to, fundamental is gonna break every technical analysis. There's, for me at least, what I believe, there's no chance of technicals in front of fundamentals. Like gold is moving as well. So yeah, at the moment with the fundamentals, gold is really bullish as well. So that's why I'm only most majorly looking for buying position. But at the same time, you see this news of like coming up where it feels like the growth goal is gonna slow down. People are gonna start taking their money out. So that's why I'm looking at selling position as well. So to your question, yeah, fundamental is the most important thing you should be looking at because that's what creates the sentiments in the market. And that's where you're gonna realize, okay, that's a really big edge. So even if your strategy was not working before, if you align it with the fundamentals, it's gonna start working.
All right, interesting. So is there anything particularly you're looking for here on gold in terms of fundamentals to perhaps stop going long and maybe look for shorts?
Well, I would say what I usually do is usually look at the big market players who are making the market. It's usually the banks because banks have a lot more data than us. And what I usually look is that every single morning, the first thing I check is all the biggest top 5 banks or top 10 banks and their forecast on gold. Like you see Bank of America, I believe yesterday increased their target from, which was, I think 3,500 initially. And then in mid-year, it went up to like 3,500. And now they have increased it to 5,000. So now I believe I should be in longs more, because if Bank of America has done that, other banks are going to soon follow, like JP Morgan, Goldman Sachs, because they have that kind of knowledge that we don't have on the internet. They have got the insights, they have got the bigger investors, they have got the money to move the market. So if they have increased their targets to 5,000, I would say I'm nobody to say, okay, now gold's going to start slowing down and go down. It's only going to go up, because those people have got the most money and they are moving the market. And if they are targeting 5,000, I should be in the bullish run as well. But at the same time, I don't want to just start full porting my account and go long, because market can have a big correction, and after that it's gonna start moving, because these banks, they want liquidity as well to open their positions. So yeah, I would say the most important fundamentals you should look at is all the big players, all the big banks. It could be a private investor or a hedge fund as well, and what they are targeting, because they're gonna be at the end the one who are gonna be moving the market, and you have to ride along with them. You don't want to challenge them.
Right. So you're not really doing like your own fundamental analysis. You're looking at reports and trying to see like where are the other big analysts and big players in the market.
Yeah.
What are they thinking about the future?
Yeah.
I think that's actually great. That's a great idea to incorporate the fundamentals into your technical trading,
because that's like a cheat code as well. It's like you are copying a professional. So I would say that's like a cheat code as well. You should do your due diligence as well. You should look at reports and everything as well. But at the end of the day, it's not what I think, is what the big players think where market should be. Then and that's the position where it's gonna go.
Yeah, no, that's very interesting. I think that's a very good combination. Okay, Mohammed, I think it's time to wrap this up. I would like to thank you for joining us here today. It's been a great interview. Very interesting to see your trading strategy here on gold. Very interesting use case for the RSI here as well. Very simple. I like it. I think a lot of people will enjoy this and take a lot of knowledge from this. If you're watching this, let me know in the comments. You want to see backtest results? Maybe we can do another interview and take a look at the backtest results. So let us know in the comments, guys, if you want to see that. If I get enough comments, we can definitely do that. But I see now that the time is running out, so I'd like to thank you and wish you all the best.